All right. It's 11:03, so let's kind of kick things off. To start, to let everybody know, first and foremost, thank you all for joining this call today. I think we all have a lot of questions swirling around in light of the Marketplace Facilitator recently, and all of the states that have just now jumped in and started participating in said Marketplace Facilitator, including Texas and California, effective October 1st. To help with this conversation today, I am including a member of the Ampersand team. His name's Ken Helms. Some of you have met or heard him before. Others may have not. Ken is, just to kind of give a little background as to why Ken is relevant and what he does. Ken trains the sales tax experts of Fortune 500s, and he does that through IPT, which is the certification that they have with them. And he not only is he a subject matter expert, but he's worked for companies in managing sales tax for monster corporations like Ford Motor Company, Intercontinental Hotel Group, etc. And when he's worked for these organizations, he was in an executive role in overseeing all these functionalities for the entire organization. So when I say he's a subject matter expert, I'm not kidding. This guy's been on Ways and Means committees. He's been gone all the way up the ladder when it comes to this subject. Ken, do you want to aggregate anything else to that?
No, actually, I think I lackingly call myself a GERD. I'm a geek and a nerd, so I'm totally comfortable with that. I do want to respect everybody's time, and Peter, thank you for that. Guys, what we're going to do here, there are a couple of things beyond just the Marketplace Facilitator that have raised their head that are causing me a little bit of heartburn, and we'll get into it a little bit here in a second. But really what we're going to do now is Peter and I are going to go through some questions that he's kind of pulled together through the various clients and other industry contacts he has. Let's talk about the ever-changing landscape and what does it mean to your compliance footprint. And I think there's a lot of question as to whether or not with these Marketplace Facilitator agreements, is there a need for you as an FBA to continue to be registered within those various states? And, like I said, we want to do this 20, 30 minutes. If we go a little longer, that's fine with me. If you want to stay on a little longer, that's great. But that's sort of where we're ballparking this. Just to give you guys an idea of where we are and what we're doing on the, I kind of hate to say it, sort of in my level. I don't pick up the phone and call the 800 number. I start with the director of the various departments of revenue and work with their tax policy leaders to get a firm grip on what the state is actually trying to do and whether or not that application makes any sense. So that's kind of where I'm looking at this, Peter. I think if you want to start us down the path, I think you've got most of all the questions in front of you, so go right ahead.
Yep. So to kind of kick things off, what I'm going to do is I'm going to start out kind of explaining Marketplace Facilitator and the different types that we've seen defined recently. And then from there, keep the questions coming into the Q&A section that you may have. And then I'm sure you're going to have a lot of questions in relationship. Should I register? Should I stay registered, deregister? We're going to cover a little bit of that and why it may or may not be prudent for you to do so. We're also going to cover basic questions as far as if you're currently registered as Marketplace Facilitator, how do you deal with it going forward, etc. So first and foremost, let's kind of elaborate on why we got to this call. So recently, everybody most likely received an email from the from the Amazon Seller Central saying that effective October 1st, they were going to be turning on a bunch of additional platforms. And then at that point, there was some confusion for a lot of us because one of the key states in all this, I mean, in Texas's case, they were abundantly clear in saying that by Texas legislation, they were going to remove the physical nexus component if it was established by Amazon. But in California's case, this is where we get into some contradiction in the sense of that California on AB 147, when they enacted their Marketplace Facilitator laws, they were very abundantly clear in saying that this was specific to Quill and Wayfair, in other words, based off the economic nexus. And so that left a lot of confusion on the legal side for a lot of the sales tax community, as far as, well, it didn't leave confusion, but rather in light of the recent Amazon email, it left confusion, because in California's AB 147, what they had stated there is that sales tax would be responsible to any party that crossed over the $500,000 threshold. And in that environment, and only in that environment, would marketplace facilitator be applicable. We're obviously seeing in Amazon's case, Amazon saying we're still going to participate for everybody. My only conclusion I can draw there, and then I'll let Ken opine on this as well, is that the state also in that same AB 147 bill outlined what we call kickbacks, or a collector's discount. So in the first year, I think it's 7%. In the second year, it's 5%, and then 3%. But what this means is that Amazon stands to make a profit off of your sales and the sales tax that you should be collecting and remitting to the states. And that's why Amazon most likely agreed to collect and remitting on behalf of everyone, even though the marketplace facilitator bill is exclusive to economic nexus. Ken, do you want to add to that at all?
Sure. And what we're talking about here is that, again, the California bill has and just for everybody here, let me give you a little bit of an insight. When a law changes or new legislation comes down the pipe that's been signed off on, there is a preamble to every code section out there, the new code section, where it states the legislative intent. And that, when it gets down to what did the state actually mean, if you're in a litigated issue, is that's what they're going to default to. They're not going to default necessarily to what the language says. It's going to be what the legislative intent was. In California, it was clear. The change was relative only to companies that did not have a physical presence. And the physical presence could be a person, place, or thing stored and not in the stream of commerce within the state of California. As FBAs, we have all found, some a little later than others, that Amazon has your inventory for sale, held for sale in the state of California. You now have a physical presence. At that point, you are subject to the regular sales tax rules and regulations as if you were a brick and mortar. The law was addendumed, or that code section was addendumed to capture the result of Wayfair, which was, if you sell enough into our state, even though you don't have a person, place, or thing, we can make you subject to our sales tax rules and laws. And that's the definition of nexus. So what they went out to do is to capture Wayfair, to capture other, overstock.com, companies that sell through their own website and maybe exclusively through their own website. And that if you tripped the light fantastic, it used to be $500,000. I think it either kicked up to $1 million. They've raised the exclusion or the exemption. So what does that mean? It means only companies that are fulfilled by merchant. If you're working with Amazon and you're fulfilled by merchant only, now you're under the rules. You either have to track your transaction. Well, actually, in California, it's strictly how much do you sell in that state in a trailing 12-month period. Okay. Once you crack $1 million, you have to register. Now, if you're an FBA, nothing changes. You continue on. Now, Amazon may say, we're going to collect on your behalf. That's great, but that doesn't absolve you from an audit or liability or penalty and interest if Amazon makes a mistake, because they're not going to go after Amazon. Legally, they come after you. Okay? So California is, like I said, is probably under the rules as is, and under historical cases, and I'm going to touch on those, why we're having this phone call, sort of the issue what gave me heartburn. So California is standing out there, and that's probably the most correct way to not have your marketplace facilitator law challenged by someone who has affiliate or attributional nexus, and we'll discuss those in a sec. So that's California. Okay, the states where there is a Marketplace Facilitator Act, where it's strictly and it's clear that the law says, even though FBAs, you may have inventory for sale here, because you sell through a Marketplace Facilitator, we're going to make that party subject to the collection responsibility, and we're going to give you a pass, supposedly. And that's all well and good. The problem is that historically, or actually currently, there are other types of omnichannel retailers that are being caught up in the either affiliate or attributional nexus simply because they don't sell through a marketplace facilitator. Okay. And the one that is out there in California, and this is pretty clear why California wrote the law as they did, and they wrote it correctly. BarnesandNoble.com. Back in the day, 15, 20 years ago, BarnesandNoble.com started to advertise that if you had a return, defective merchandise, blah, 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 instead of sending it back through the mail, cost of postage, run into the mailbox, blah, 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 you could take it back to a Barnes & Noble store, and they would take the return and give you credit or a refund. Now, understand that BarnesandNoble.com and Barnes & Noble brick and mortar were two separate legal entities. They were related, and that's called affiliate. Okay, that's affiliate nexus. So California came down and audited BarnesandNoble.com, who at that point in time did not have a person, place, or thing in California. And what I don't know if it went all the way to the Supreme Court in California or not, but California's position was that because you have a location in the state where you could take returns, you're not making any sales, you are simply taking back returns on behalf, right, of a separate or affiliated entity. Not only do you have a person, place, or thing, you have a physical location, and that is critical. Now let's go to the marketplace facilitators. Okay, guys, you're selling through. Let's take Texas. Okay, so hey, marketplace facilitator, that's great. Amazon is saying, please, kumbaya, we're going to collect this on your behalf. Everything's great. And oh, by the way, Amazon doesn't do anything for free. Obviously, you see with the collection phase-in, the discount. But Texas has the same problem. What happened is, and I'm sure you're all aware, the returns, Amazon is trying desperately not to become a return center. Amazon doesn't want to mess with it. Amazon has now signed a national agreement with Kohl's department stores. And oh, by the way, Kohl's is in every state except Hawaii. Okay. So you sell something to Texas through Amazon and it's effective or whatever. Instead of that going back through Amazon's return process, the historical process, that return is now taken back to a third party in the state, taking it on behalf of, and you will be able to, now, as far as where the credits go, that's yet to be determined. Okay, we haven't seen functionally, and we're working on that. But what Amazon has now done, okay, and I have a feeling this was planned. Listen, I know the guys over there. This is a pretty smart move. You now not just have inventory, like I said, you have an actual physical location in every state potentially. Regardless of, and now you bring in that marketplace facilitator, you've got a problem, okay? And because Kohl's is a third party, remember the BarnesandNoble.com and Barnes & Noble, because they were affiliated, that's affiliate nexus. The Kohl's agreement with Amazon is called attributional nexus. Okay, they're different. Attributional nexus is simply two third parties have an agreement to work for each other in a certain state. Okay, there's a problem. And those companies that have affiliate or other attributional nexus that has been imposed and adjudicated based on the BarnesandNoble.com issues, and Barnes & Noble does that everywhere, you've got a conflict. You have a law that has been upheld and adjudicated versus a law that has never been tested. They're in conflict, and they will look towards a historical precedent first. And reading some of the legislation that came through, the states did not properly adjust the other sections of the code relative to attributional or affiliate nexus. California did. Nobody else has yet. Okay. So what it comes down to is Amazon may get into an audit situation and miss a tax collection on an FBA item. The state will try to assess, and Amazon will pull out the Barnes & Noble case and say, oopsies, you can't impose this on me because of this adjudication in this previous law. And guess who they're going to go after? It's not going to be Amazon. Now, they'll fight it, yes, but ultimately, and especially in Texas, Texas is the only major state that will collect tax both from the buyer and seller on the same transaction. They will double dip on the tax. So if they can't get it from Amazon, the state law allows them to come and get it from you. Even if Amazon pays eventually and you've already paid under an audit, they're not going to refund the money to you. You're stuck. Okay. There is, and I don't want to get too deeply into some potential solutions and protection for our clients, but we've already begun conversations at a very high level within the various departments of revenue, comptroller's office, etc., to bring forward this idea or bring forward this issue. Okay. And I'm not I'm not generally excited by the oopsies I'm seeing from the other side. So what I'm getting to ultimately is that in states, if you're an FBA and you're strictly selling through Amazon, okay, and you don't sell through any other marketplace platform, should you deregister? I would strongly recommend not doing so yet, okay? Multiple reasons, okay? By deregistering, you've now stopped your statute of limitation protection, okay? Which means how far can the state go back? Understand that it's going to be another 24 to 36 months before the audits of the Marketplace Facilitator Acts begin on Amazon. Okay, and those will take years to finish.
Okay.
Simply the way. Yeah.
Can I chime in for 1 second? Just I want to make
Sure.
this a bit. I want to break this down a little bit for those that may not have the background or the vernacular in the sales tax. And so what Ken is referring to is that Amazon has deliberately, in light of this whole Kohl's situation, left a loophole that if they get audited by a state, Amazon can, based off this legal loophole and this precedent set by Barnes & Noble, deflect the responsibility from Amazon directly to the third-party retailer. They know this. They're keeping it in their back pocket. And that's why Ken is suggesting what he's suggesting, is because from a protection standpoint, we know that that Amazon always covers their bases and takes care of themselves. And they've deliberately not said anything on this subject because they're keeping it in their back pocket just in case they need to use it, but they're not publicly saying it because they'll play the card when it's necessary to play the card. Is that fair to say, Ken?
Yeah, and let's be very, very clear. This agreement with Kohl's has been 12 to 18 months in the negotiation process. They knew this before the first Marketplace Facilitator Act was triggered. Okay, and they kept that issue quiet. And now we're getting all these states are jumping in the Marketplace Facilitator, and all of a sudden here comes the announcement, oh, gee, you know what? You can take it back to Kohl's because Kohl's it's so much easier. And if you're not paying attention, okay, you've got a problem, okay? And here's where we're driving at. And I know, Peter, we've gone back and forth a little bit about talking about it. If you've been with us for a while, we've had discussions. It's something called a letter ruling, okay? What is that? Well, here's the basis. You can have all the discussions with the state, and you can get all the assurances from the director on down that, oh, no, we would never tax that. But unless you have it in writing, it doesn't mean anything at all, okay? Doesn't hold up under in an audit, will never hold up under judicial review. So in order to protect yourself, okay, and I've worked, and listen, this isn't for small people, this is for very complicated or reasons or theories. And I've written, I can't tell you how many letter ruling requests working for a Dow 30 component, okay, 2 Dow 30 components. What it is, it's called a private letter ruling. We have discussions, which we've already started, with the state. We start bringing forth the issue. And we work very closely and at a very draft level only, not for publication, not for ruling level, until we're sure what the state's answer is going to be. If we don't like it, we don't ask for the letter ruling to be issued. If we like it, we ask for it to go ahead and finalized and issued. So what we're driving at is in the big states where there's, it's Florida, Tech. Go through the list, right? Everybody knows where they sell most of their stuff. Texas is, because it's so big to everybody across the board, I would not deregister until somebody, in the FBA marketplace has a letter ruling sitting on their desk, signed off, that says you are absolutely protected. We will never come after you for anything. Now, these can be fast, they can be slow. It's all in the negotiation and discussion between the state and the provider. You can do them yourselves, but I would never recommend you do that. You can trip up and cause a lot of misery for everybody else. And let me tell you, the state gleefully publishes letter rulings that were written without professional advice, and the entire industry now hates you and you're a pariah. Okay. Peter said that I used to work. Yeah, sorry, go ahead.
I was going to say, let me chime in kind of again why we're talking about this whole letter ruling thing. One of the things that Ampersand has done proactively behind the scenes that we haven't really made very publicly available is we started communicating with the states directly and understanding better how we can protect our clients in light of this whole situation and the Marketplace Facilitator. So we started reaching out to states and pointing out certain contradictions that, again, would deflect Amazon to deflect their issues onto you, the third-party retailer. And so what we're doing now is looking for the state to clarify with us through this process Ken's mentioning, the private letter ruling, to give us something documented in writing confirming that we can absolve our clients from potential liabilities. So that's where Ken is going to his apologies for interrupting you, Ken.
No, and that's a much better discussion point. I apologize. I will geek out on you on tax stuff. I've spent 25 years of my life doing it, so I really love it. But here's the best thing about a letter ruling. And again, Texas is the one that, because Texas can come after both parties, of a transaction for the same tax. If somehow, if this issue comes up and it goes to court and it is adjudicated and Amazon wins, okay, what does that mean? That means the entire Marketplace Facilitator Act was invalid, and they will come after every FBA who had inventory at some point in time in Texas and or had an item returned to Kohl's. They will go back as far as they can. That's why I'm saying don't deregister yet. Okay? This will take years to adjudicate. But if you have that private letter ruling in your hands, the state can't do anything retroactively. They can only make you collect prospectively. And like I said, an audit, generally, your penalties are going to average out about 20% of the tax due. Your interest is going to be 10 to 15% of the tax due. So you're paying $1.35 or so on every buck you didn't collect, plus any audit support, audit representation fees, versus having a letter ruling that, like I said, they're not cheap, but they're not expensive considering the risk. And like I said, I wanted to bring that forth because the Kohl's and having, Kohl's is what, the biggest department store now in the U.S., okay? They've got 1,100 stores. They're in 49 states. They're everywhere. So you really are at risk in every state of some, a state coming in and say, oopsies, you actually do have a physical presence and not just inventory, and then you'll fall under other rules. You'll fall under attributional nexus rules versus a marketplace facilitator. That's the risk. Okay? And like I said, Peter, that was the one I was trying to put both things into. Why am I saying don't deregister yet? Okay, let's really there's too much money at risk. This is still too much in flux. Nothing has been reviewed at a judicial level. Nobody knows that these marketplace facilitators are even worth the paper they're printed on, and or we don't know who else is in a omni-channel distribution model that isn't using a marketplace facilitator but is getting stuck with a nexus requirement. We have what's called a similarly situated taxpayer. Why are the rules different for them instead of you? And that really causes a court to say, well, the law is invalid. You can't do that. You simply can't do that. Okay? So let's kind of go at this from a high level one more time. California, if you're an FBA, don't deregister. You still got, if you want to risk having Amazon collect for you, but Amazon isn't going to be harmed if they didn't. If you come up in an Amazon transaction where Amazon didn't collect tax, you go into the audit pile, or for either a desk audit or a full-blown audit. That's the risk, okay? If you continue to be registered, even if you're filing, if you want to collect, if you want to trust Amazon, but you still file your zero returns until you get a letter ruling that Amazon's stepping up to collect on your behalf, even though you have a physical presence, is in fact valid, okay? Then you can deregister if you want, okay? I would recommend it, yeah, okay, deregister in California. I don't think the answer is going to be, sure, Amazon can do that, and we're going to leave you alone. I don't think that's the case in California, simply because that's where BarnesandNoble.com started.
So,
okay.
So to clarify this piece of it all, we tend to be more on the conservative side on this, and the reason again is, for example, Ampersand, generally we make it our business to know what's going to happen prior to it actually happening. In 2016, we had identified the e-commerce sales tax issue and started bringing it before a lot of the groups and forums. 2017 kind of started happening. In 2018, we started seeing the states aggressively, proactively pursuing the subject. Now what we're seeing as writing on the wall is that Amazon has deliberately, knowingly, in our opinion, we could be wrong, but we feel pretty adamant about this. Amazon doesn't make mistakes. Has effectively, through the Kohl's component, left themselves a loophole that allows Amazon to deny responsibility if, in the event that they get audited by a state and the state finds a discrepancy, they can use the old case law from Barnes and Nobles, who got popped for a similar environment or situation, in being able to have plausible deniability and saying, no, it's affiliate, and so you need to go to the third parties.
Peter, let me give and this one I bowed down to this attorney because this was the most incredible argument I ever heard. South Carolina mandated that because they didn't have a physical presence yet there, this is a decade ago or more, they said, well, you must give us your list of customers and what they bought. Back then, Amazon hadn't been the retail, every SKU out in the world, in a world selling place. It was still primarily music and books. Their attorney argued that it was a First Amendment violation, freedom of speech, because they would disclose if somebody bought the Turner Diaries or whatever, you are actually disclosing what someone who has free speech was reviewing. It won, okay? I've never seen a free speech argument in a sales tax case, and they won. They don't have your average attorneys, okay? These guys are sharp. And this is, like I said, I as soon as I read it, I called Peter and I said, oh no. It's like, oh my goodness. And again, I will be very, very conservative. My job is to protect you from an audit liability, okay? And I can guarantee you it's not going to take 90, 100, or 180 days to get a letter ruling out of a state. It simply won't, okay? You might get one or two more returns in before you get your letter ruling. And if it's, and if we think it's protecting you and we're going to get the right answer, then we will advise immediately, get the letter ruling issued and get you deregistered. Okay. But my job, first and foremost, our job is to protect you from any liability. So we're anticipating anything and everything. And that's why we stay up on any movement going on within this particular market segment. And like I said, guys, none of this has been argued before a court. And when it does happen, it's not going to be pretty. I really don't think that under scrutiny, these things are going to hold water. I just don't. Okay? Not as written.
A couple of things here then to recap again, to what Ken said, is we are, in many cases, this e-commerce and sales tax and Quill Wayfair today is considered the Wild West in the sales tax community, because the laws are pretty much revising and changing on a daily basis, state by state.
Uh-huh.
So because of the uncertainty based off the current state laws, we're recommending that it's much easier to do hypothetically a quote unquote zero filing because Amazon collected on your behalf, versus all of a sudden there's a policy change and we're getting blindsided by said policy change. And we saw that previously on the whole California front. A lot of people, there was a lot of questioning over whether Amazon is the retailer or not in consignment. And then we quickly saw the state turn around, even under that argument, and start sending out desk audits or what they call nexus questionnaires. And so many people got that questionnaire from California, even though there was a valid argument in place in regards to consignment. So, and from a state perspective, we also have to understand how they think. It's always about dollars and cents and profits and losses. And so what I mean by that is that when a state evaluates the target they should go after and why, it's much easier to fight an e-commerce retailer, a third-party retailer that's a smaller business, and the accumulated liability retailer by retailer is, sub $30,000, sub $50,000, just because of the fact that what we're seeing in this kind of environment is that it's much cheaper to do that because it won't make it to court. And if it goes to court, which is what the states are banking on, the legal fees would far exceed what you owe to the state. Now, flip side is in Amazon's case, Amazon's liability is in the millions or more, or tens of millions. And so they're going to lawyer up. They're going to throw a lot of legal weight behind this. So from a state perspective, it's a bit of a bully tactic in the fact that they're looking for the easiest low-hanging fruit. And that's why we're here to kind of help jump in and protect, because we see that. I do want to pivot over to the Q&A section, Ken, if that's okay.
That's fine.
And so let's go off into some of the questions that we've seen so far. We have 3, so if you have more, please keep them coming. The first one we saw is, so in relationship to our reports, every client has the ability to request our sales tax analytics reports and Nexus overview. And so one of the questions was in relationship to the report that you receive. Under the tab of sales tax collected, the question was in relationship to, does that incorporate the money that was remitted to the retailer, and does it also incorporate marketplace facilitator? The answer is yes to both. So in other words, what the tab does on the collected sales tax front is it accounts for all sales tax that's been collected, either by the retailer or by Amazon. And so what it does is obviously the responsibility or the amounts of payments on that collected tab will shift at some point from your biweekly payments or payouts over to your to Amazon, just remitting directly in your behalf. And so to answer the question, it's an aggregate total amount of sales tax collected. It's not unique to the retailer or to Amazon, but rather the total amount collected in that market. Ken, do you want to add anything to that, or are you good with that answer?
No, that's good.
Okay.
That's good. Go ahead.
Okay. So the next question is, it's a 2-part question, Ken. It says, can we opt out of Amazon paying on our behalf since we are still paying for our personal website sales? Is the first part. And then the second part is, as you know, we are not paying taxes in every state because we do not hit the sales quantity threshold in all states, even though we have Nexus in all states because of Amazon FBA. Does the Colt agreement change our requirement to have to file in each state? So do you want to take that one on?
That's where, yeah, and that is an absolutely perfect question. The answer to me is absolutely. It changes your profile. Okay, it has. If I was still with the Department of, I know some of you have heard this, but in 1998, I was working for the Illinois Department of Revenue in their technical review section. I was asked by the director to go find a way to audit Amazon. And I found it through affiliate nexus. I found it through attributional nexus. Okay, that's back in 98. And that's how long some of these, these laws have been in effect. Why I'm concerned is that we will do a risk analysis, okay? And in those states where, what's your risk in South Dakota? Yeah, right. I think we look at it from we go back in on each individual state. We look to see if there is a BarnesandNoble.com ruling or case that has been adjudicated, the final adjudication. If it is in fact adverse to where your position is now because you haven't met the economic nexus threshold, either in transaction volume or dollar volume, we're going to then take a look through, like I said, we'll do a risk analysis. Does it make sense to go ahead and register now? Do we go forward and get a letter ruling, right? Then we start looking at options to protect you, right? Or to mitigate any potential exposure. But it is obviously, that's why, my heartburn started, is these states where you're not tripping that economic nexus threshold, but now because Kohl's is taking merchandise back, that has changed the landscape and the rules potentially that you now fall under.
And Ken, the first, and then the other question was asked was, can they opt out of Amazon paying on their behalf since they are still paying for their personal website sales as well?
I would, that's a discussion we're going to have with Amazon, because that's a mess. Okay. It is a mess. If you're in a clearly defined where there's no BarnesandNoble.com or attributional nexus issue, okay, if you get some sort of letter line, we have enough discussions with the state that we're comfortable advising to do so. Peter, like I said, I need to have a deeper discussion with my guy over there. Yep. and see what our options are. You should be able to opt out, okay? And again, it's a simple phone call right now for us to call the state and say, hey, look, I got an omni-channel. They're over the threshold for economic nexus. They're an FBA. They got Kohl's returns. Can they just opt out of Amazon collecting and they collect on everything just because, right? You want to make sure there is no potential hole. And the state's going, no, fine, or yes, okay? And that's where we need some very specific state information, Peter. Yep. Okay? And maybe we need to figure out, go ahead.
Well, the one thing that I have for you, Ken, is there a legal responsibility for Amazon to allot the retailer to do that? In other words, if a retailer says, no, look, you're collecting on my behalf, I don't want you to do that, does Amazon have a fiduciary responsibility to them to remit because they're being told they're not allowed to? And technically, based off of the contract and definition today, Amazon is not the retailer.
And again, there are potential ways to get out of that, either through an exemption cert or some other way. And again, that's a discussion. It's going to be very, very state specific. Okay. But you should be able to, and again, it's Kohl's. If we're looking at just FBA without the Kohl's, okay, without the returns going to the Kohl's, and we've got let's go back to California, because California was done so right, so perfectly. And by the way, in case you didn't catch it, the California law not only changed their economic nexus, but it took away affiliate nexus. Okay, you can't do one without the other. Okay, and again, this gets very, very technical, but okay, if there was no Kohl's involved, if there was a very clear and well-defined, and without an issue, the merchant or the marketplace facilitator, I don't know if I would opt out. Okay, I don't know if I would opt out until I got I think you can do it, okay? And I think Amazon can be, if they get some sort of cert to cover their butt, and again, sorry about that. But again, it's a discussion with the state, the specific state, as to, okay, we've got a client who is just not willing to risk anything and wants to charge, collect, remit on every sale they make, regardless of distribution model. Okay. But I wouldn't do anything without a good conversation, and I'm very, very confident, you know what I mean, that I'm just from a conversation, and or I send them sort of a generic email, and believe it or not, emails will work. Okay. If they're defined enough. There's a guy in Georgia that would always give me an email in lieu of a letter ruling, and they always upheld in the audit. But again, don't do anything rash right now, okay? The Kohl's just changed everything. And I don't know if a state has realized, I'm confident states haven't realized Kohl's happened and what it did to their marketplace facilitator, because they've moved on. It's the next hurdle, right? I think, Peter, the Rhode Island issue, right? When Rhode Island got Amazon to collect for them, they were estimating $43 million uptick in sales tax collection, something ridiculous, right? So money is always at risk, but we would have, like I said, I would not do anything rash until we have an actual sit down. Let's really talk through it so that I can have a very defined and accurate conversation with the Department of Revenue and feel comfortable enough either through that conversation or get a reply email, or if it's fuzzy, we're going to recommend, let's take it up a step, and a letter ruling would be the right way to protect yourself. Again, my job is to protect you. Once you came into the fold, that's our goal. You're never going to have an audit problem. Okay. We're going to make sure the taxes are on, they're on right, and they get reported.
So the next question, Ken, is rather than deregistering, can we not request from the states to change to less frequent filing requirements?
Annual.
Huh?
Yeah, that's. What happens is that you can request it. They're not going to do it for 12 months. Okay. Whatever, and generally, if you're quarterly, you're going to have you have to hit a trailing 12 or calendar year below a certain threshold before they adjust, and the states do it automatically. Okay. So I'm pretty comfortable that Texas is looking at all their NAICS classifications and looking for e-com retailers and preparing for zero returns to come. They may make a wholesale, put everybody back to an annual filer. Okay. But the state does it on, it never hurts to say, what's the worst they can do? They say no. Okay. Oh, well, right. And I know within 12 months, you're going to be an annual filer anyway, if the, merchant model or the marketplace platform law will survive scrutiny.
Yep. And I'd like to add to what Ken said there. Specifically, I think, once you've crossed that 12-month threshold, where you have data that the state can work off of and metrics that they can then see. To answer this question, I think, and to what Ken also said, you're well within your right to reach out to the state and say, hey, look, I'm doing zero filings here. Can we push the frequency back? Let's be realistic to semi-annual or annual. And I think, one of the things that, Ken, you can correct me if I'm wrong on this, but one of the things I think the states quickly realized and why they started moving towards marketplace facilitator was the fact that they went from, 10 multi-million-dollar filings, let's just use Virginia as a hypothetical, to 10,000 $1,000 filings. And that quickly burdened the state system, quickly burdened the state in keeping up with a massive influx like they had. And so then they started looking at this whole marketplace facilitator in order to simplify the overall process. Is that fair, Ken?
Well, it's a certain point, because now you got to go audit, right? You got to go audit the $10,000, $1,000 returns. Okay, they hit that threshold. The other thing is that states have become educated and they understand that approximately 50% of Amazon sales are not their stuff. Okay, so if I can, by legislation, make a behemoth that is never going to go anywhere, he's got a ton, a gazillion dollars of cash, and get 100% of that guy's sales in a stroke of a pen, that's a no-brainer. That's what happened. These things happen too fast. And Peter touched on it, but when you have a revenue bill or a tax bill, part of the Ways and Means process, it doesn't get out of subcommittee, okay, until the Department of Revenue has done a revenue scorecard. And they're looking at, is it revenue neutral, or is it revenue negative, or revenue positive? Depending on your state, most states don't, most voting populace don't want more taxes. But, right, like I said, it's one of those things that, yes, ultimately, if everybody was in compliance, they'd have the same dollars, okay? But the cost of compliance enforcement is enormously more expensive than having one audit of one giant retailer and getting everything. Okay, good point.
So to answer your question on this one, the answer is you can try before the 12-month period, but it's unlikely the state will even respond to it. Once you've crossed that 12-month threshold, you're certainly well within your right to contact the state and say, look, my numbers are.
Oh, it'll happen. It'll happen automatically.
Oh, okay.
So they will automatically, they'll automatically adjust you. Okay, once you hit the trailing 12 or 12 month or the calendar year, and you fall below a threshold, it's systemic. They'll issue a letter, you drop to a semi-annual, annual filer.
Yep.
Okay.
And if they don't do it, you can still contact them and ask. But to what Ken is saying though, in most cases the states are hyper vigilant on their numbers, and so they're paying attention as well. A lot of this is very automated, so the system is just going to kick out and say, okay, they're doing $1,000 filing at best, or $100 filing at best every quarter. Then the state's going to say this just isn't worth the time and effort. They'll kick it to semi-annual or annual. But again, if for some reason you're noticing this and the state still hasn't done that after the 12-month period, you're well within your right to contact them, and if nothing else, just ask. The probabilities are going to say, well, or a lot of states will say, well, the system does that. In some cases, you can request a change. So that's certainly
right. And Peter, just so you know, if we're getting a letter ruling that is protecting you, that makes Amazon completely responsible, even in light of colds, part of that letter ruling is an immediate filing frequency to an annual filer. Okay, so we had everything opined in one shot, because now we've got proof that you have zero liability, you're strictly an FBA, you're done. Okay.
Yep. The next question is, how is Marketplace Facilitator going to impact sellers who haven't been collecting sales tax in states where they are food exempt? So I think more specifically for this question, here's a retailer that sells in the space of either food or supplement or something like that, and they're trying to better understand, they may wrote off, for example, hypothetically, Texas, on a supplement side or food, exempts sales tax, and so they haven't been registered with the state collector admitting. So what are the ramifications of that within Marketplace Facilitator going forward?
Okay. All it does, if you haven't registered, all it's going to do is extend your audit period if you're ever selected. Okay. If what you sell is properly coded as exempt and it's all exempt, the state can audit you, from here to Hawaii. But at the end of the day, there's nothing you sell that's taxable. All it's going to do is, instead of a 3 or 4 year look back, it's going to be 6, 8, or 10. Okay. And understand, Peter, and again, I think Peter's helped some of you guys through some California audits. If you're missing one piece of paper, it's taxable. Okay. If you cannot, through documentation, either direct or alternative documentation, support what you sold was in fact that particular exempt product, the state will make it taxable, and they will project. Okay. So even though you didn't sell anything that was taxable, you couldn't find 12 invoices or 12 descriptions. Those 12 cells now become an error rate based on your sample population, which gets projected against your total sales population. And you're stuck with a liability simply because you didn't have 12 pieces of paper. Audits are nasty. Okay. And that's why registering and filing zero returns keeps that look back to the absolute legal minimum.
I'd like to, and if I can aggregate to what Ken was saying, to give an example. So when we have to do quote unquote amended returns because something was miscalculated, what we do in that environment, we'll send an amended return in, and oftentimes because it's an amendment to the original return, the client may get slapped with some penalties and interest as a direct result, because then at that point the state's saying it's a late filing, and so they find ways to tack on additional revenue to the state. That's obviously case by case and state by state. Some enforce it, other ones just remit the amount. But where I'm going with all this is that it does have implications in the sense that, and my guess, Ken, if I'm drawing a conclusion from that, is that if you have to do back filings, even for a zero amount, there's potential for P&I just because of the fact that they hadn't been reporting the entire time. Is that fair, Ken?
Right. And again, it's a cost benefit look. Okay. If you've only been in business a couple, 3 years, you know, your call. But understand that those first couple, 3 years of business are going to be auditable for the next 5. Do you really want to carry all that documentation and the risk of loss? Or just register? You got 0 returns, and, you know, it's kind of up to the state to force the look back. Or you've got a VDA, or we effectively can get it done with a letter ruling. I mean, there are other ways to get the same result, effectively keeping the state from legally going back to periods where you didn't file, even though you had no taxable sales. You had sales, but they were just exempt. Okay, there are many ways to go at that. Again, it'd be case by case and state by state. So, like I said, Peter said, some states will be, hey, that's fine, just register, backdate it, right, to the registration, but we had 0 taxable sales. Most states will say, okay. And what they'll do is they'll put you on an annual filing. So instead of 36 returns that weren't filed for a 3-year, you have 3. And they could be $15, $20 per return, right? So like I said, there's all sorts of ways to mitigate that look back, but you know what your record retention policies are and what your record retention looks like. If you're confident you have it, register now, go forward. File a 0 return.
Let me ask you one question I'd like for you to opine on, and this is a little double-edged, but is there a minimal amount per state? Let's just say a hypothetical, I don't know, sub 1,000 a year, where you say the amount is so small it's just not worth the effort, or are you of the take that regardless of the amount, you should still report and register with the state?
For those of you who got with us when this thing started going crazy in 2017 with the MTC, you know, we had a lot of these discussions. Okay, it's a business decision. Okay, you can register, sweep them all into the first return, or spread it out over the first 12 returns. The liability is paid. So if they go back and look under audit, the only thing they could do is put some penalty and interest on it. Okay, and given the minimum amounts, it's not going to be much versus paying for a full-blown FDA or VDA. Sorry, FDA. Geez. A full-blown VDA that could run you a couple $1,000 to get done, versus worst case scenario, you got $200 in P&I. Okay, it's a case by case determination, and you know, we can say how aggressive certain states, but honestly, if I'm a state auditor and I see that de minimis amount, I'm not going back for it. Okay, just not. It's not worth the time, effort, energy.
And I know from my side, Ken, in some of these CA audits, California ones, especially for the smaller retailers, and again, I'm not advocating for this, but just kind of, you know, state the facts. I know that in some of these smaller retailers' case, you know, we have one retailer sub 100,000 a year, and you know, thus far to date, the state's been very how do I put this delicately? They're not putting as much attention on the smaller ones in the audit versus working with the larger ones with greater liability. That being said, part of the reason may very well be because of the fact that California right now is currently inundated with audits, and so they're just having to make a snap decision because they're just understaffed.
Like I said, in working for one of the 5 nastiest states out there as far as audit aggressiveness, the small guys, and generally that's what Peter and I do. That's why this is how we earn our fees, is because my reputation is such as if, I call up a director and I say we did something, they're not going to double check me. Okay. And I think, it's a discussion of what does the state really want. And California, good, bad, or indifferent, kind of loves Ampersand because we were out there beating the drum, guys, get registered, right? And they've worked very well with us. And then, I hate to say it, but it's a lot of horse trading and it's a lot of reputation. At the end of the day, though, it's a business decision. I'm not going to, hold anybody to any kind of moral or ethical standard. If I got $450 of liability going back 5 years, shoot, I just sweep that into the first couple of returns, register as a go-forward basis and be done with it. Okay, because you're not on the radar. Guys, part of the job I did for Illinois was rewrite the audit selection process. And the analytics we utilized, there were thresholds. If you fell below a certain revenue threshold in a certain, it used to be SIC, or an NAICS, you weren't in the audit bin at all. Okay, you simply weren't.
So the next question, Ken, and this is a good one actually. So from an Amazon perspective, when they're remitting the sales tax on the marketplace facilitator front, how does that work? Do they just do a lump filing and they include all transactions, including exempt items, et cetera, and then break them all down for the state?
It's just like any other filing. Okay. The report we get, or our clients get, of what was taxed, instead of going to you, it filters into the Amazon inventory sold report, okay, of Amazon's. And it just gets reported as if they sold it and it was their inventory. Okay. And I don't know how many people were around, or this is a tax geeky thing, but below the fold, page 1, Wall Street Journal, about 2009, this is during sort of that financial crash, a article was there about Walmart's tax war room. And that article actually expressed and put a dollar figure on it that Walmart was making $60–70 million a year in collection discount because of their volume. Okay. Amazon doesn't do anything for free. Okay. We've got a couple of things up our sleeves that, Peter and I have discussed about trying to understand why Amazon would not fight the responsibility to collect and remit for everyone. There is something financially beneficial in that deal. Okay. Either through an income tax credit incentive, taking off the cap of the collection discount, or like California did, phase it in, right? Phase it down instead of up. Okay. There is a monetary benefit somewhere, somehow to Amazon for agreeing to be within these marketplace facilitator agreements.
So in closing, the final piece that I would say, because it looks like we don't have any more questions at this point, but one thing to note in all this is that, and this is a critical piece to everything when you're evaluating should you stay registered or deregistered, is the fact that when Amazon remits to the state, this is a lump amount. So they don't necessarily delineate or distinguish the retailer they collected and remit in behalf of. What Ken had touched on is that they use what they call NAICS code. And what that is an identifier of what type of business you are. And so when they look at that, they know if you're an e-commerce retailer, or if you're a brick and mortar, or if you are a law firm, or et cetera. And so what right. Ken was mentioning before was that, if they see you doing zero filings, or if they see a oddly low number, if they look at your code and realize the type of retailer you are, then they can draw conclusions in relationship to, okay, this person must be subject to marketplace facilitator. That being said, the concern though is that Amazon's not reporting to the state how much they collected or remitted in behalf of your business. And so a state at any given time could, jump in and ask the question, just to see your financials and look at your data just because they're curious.
Well, and going back to that point, Massachusetts had to go to court to enforce subpoena, tucus tucus. It's actually a Latin term. It's not that. But it is a prima facie that, if you're in my state, you have to turn over everything upon request. That is reasonable. And under audit, I get to see everything that relates to the sale of tangible personal property that is delivered within the borders of my state. So where would you ever be found in a marketplace facilitator state? Let's go to Texas. Amazon is audited. They're going to pull out the transaction transaction report or select a sample, right? And within that sample, they can bring out, within their, whatever they put in an Excel spreadsheet, they can put the actual FBA in that line. Or if it's not taxed properly, the state will come back and say, okay, either you owe us this, or, that's when Amazon could whip out the Kohl's issue or the Barnes & Noble issue and say, oh, well, here's the guy who sold it anyway. And this is his stuff, not mine. Okay. And again, the audit risk to FBAs is always in the audit of Amazon, that they will, and Amazon has to provide. They tried to fight the first 2 or 3, and then Amazon basically rolled for every other state from that point forward. They knew they were going to lose. Okay. I don't even know why they fought. It's good PR for their FBAs, but there was no legal reason for them to say no. Okay, they couldn't say no. Yep. Your risk is always, and listen, let's be very honest, and I'll tell you this, from here until the end of time, Amazon will always be under audit in every state. It will never end. Okay, every year that they're in existence from this point forward, every state will audit all the time. They will never even miss a month of filings under audit. Won't happen. Okay. Now, the beautiful thing is that because the volume of transactions, these guys are looking at sales, not of weeks or months or days. They're looking at sales volume in per minute or per second. Okay. So there's a lot of vendors out there, but anybody can be selected at any time. It's a statistical probability at some point everybody will be viewed. It's just where and when.
Thank you, Ken. So to kind of close this out and recap, unless there are any other questions, which I don't see currently, ultimately there are some areas that we have some reservations and concerns in, especially related to Amazon shielding themselves and potentially using the third-party retailers under certain premonitions of audit and risk if a state were to find a delta. That being said, ultimately, as a business owner, your business. It's a business decision to make in how you handle this. You can evaluate deregistering with the state. As Ampersand, we don't necessarily advise that just because of the pending ramifications that could occur. But we also understand why you might want to do it. So the thing always that is important in all this is to evaluate your business, what your sales, and also understand if you do deregister, what are the potential implications from a liability standpoint, and then what is your risk tolerance threshold. So, if in the event, to remove some of these filings and to save some money there, does the ends justify the means? In other words, will your savings exceed what you would end up paying or what you'd have to deal with if you're under audit? And so that's always going to be a business decision for you to make and for you to evaluate. We're always just going to present the data and then potential pitfalls to keep an eye out for. But we certainly understand, how you wish to run your business is your decision. We appreciate all of your time and participation today, and the questions we got were excellent, and thank you so much for asking them. There is a recording, so we will be sending this recording out to everyone after. If you want to listen to this at greater length and take notes, that's fine. And then if you had any questions that we missed, don't hesitate to email us and ask, and we'll try to respond to you as quickly as possible. So thank you all for your time, and thank you, Ken, for coming in on this call and giving your experience and opining on these matters. And in the meantime, happy selling, everyone.
All right, guys. Thank you so much.